not all financial advisors are made the same. The right financial advisor can add hundreds of thousands of dollars to your net worth. The wrong financial advisor could cost you hundreds of thousands of dollars, if not more. And unfortunately, most people don't know that there's different types of financial advisors, let alone how much your financial advisor is costing you. But that ends today with this video. Let's start with a very basic example. Let's assume that two people are investing $1,000 a month and they're investing their money into the same type of financial advisor. You'll see what I mean in just a moment. But they're getting two different types of returns. Financial advisor A is getting an average 11% return a year. Financial advisor B is getting an average 10.25% return a year, a little bit less. But the difference here also is that financial advisor A costs a little bit more to get those higher returns. They're charging 1.5% on your assets. Financial advisor B is charging 0.5% on your assets. What happens after 40 years of investing $1,000 a month? With financial advisor A, you're going to end up with $4.6 million, which is a lot of money. But with financial advisor B, you're going to end up with $4.9 million. That's an extra $300,000 in your pocket just because you understood the fees better. But that's really just the beginning. In general, you have four different types of financial advisors. You have fee-only financial advisors, you have commission-only financial advisors, you have fee-based financial advisors, and then you have performance-based financial advisors. They're all financial advisors, but they can cost you very different amounts of money. Now, I want to remind you that for those of you that are investors and you want to stay up to date on top of what's happening in the financial markets, my team at Briefs Media publishes a free daily report called Market Briefs, where we're breaking down what's happening in the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that read Market Briefs every morning, and when you join Market Briefs as a complimentary bonus, you're also going to get an investing masterclass taught by me, where I'll walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. This is all completely free, so if you want to get Market Briefs plus get my investing masterclass, all you have to do is click the link down in the description below. The way fee-only financial advisors get paid is you have to send them some money. So that means they might be charging you a flat fee, maybe $2,000 a month, $2,000 a year. They might charge you a percentage of your assets under management. So if they charge you 1% of your total assets, that means if you invest $100,000, you're going to be paying $1,000 a year. And as you grow your assets, your financial advisor is going to make more money, because now if you have $1 million, 1% of $1 million is $10,000 a year. Then you have an hourly rate, which might be $200 an hour, just to consult with your financial advisor. Commission-only advisors make money when they sell you certain types of financial products. So they're going to be selling you mutual funds, they might be selling you life insurance, they might be selling you other financial services, and then they're going to take a percentage off of what they sell you. So they're kind of like salespeople. The more stuff they sell you, the bigger the stuff they sell you, the more money they make. Now, just like anything else, there's going to be some good commission-only advisors. There's going to be some, maybe a lot, of not so good commission-only advisors, because they get paid based off of more things that you buy. Fee-based advisors are more of a hybrid of the first two. These are people that might charge you a flat fee, maybe $1,000 a year, maybe $1,000 a month, maybe a percentage of your assets, plus getting a percentage of commissions. Now, generally the way it works is they're going to charge you a lower fee because they're also making these commissions, but the whole idea here is they're making some money off your assets plus a commission on the products that they sell you. A performance-based advisor is going to take a percentage of your growth, maybe a percentage of your profits, maybe a percentage of profits above a certain baseline, above a certain percentage. The risk and problem here is many of these performance-based advisors only work with high net worth clients because, well, unless you have a lot of money to invest, it doesn't excite some financial advisors to take this risk. So if you have a financial advisor or you're thinking about getting a financial advisor, the first question you want to ask is, how are you getting paid? Are you this, or this? And the second question that you want to ask is this advisor a fiduciary? Now, what a fiduciary means, this advisor has to, by law, do things with your best interest first. Now, that might seem pretty straightforward. I mean, every advisor is supposed to do that, but a fiduciary gives you the legal obligation that they're supposed to do whatever is right for you first. Now, generally, not all the time, but generally the way it works is that these fee-only advisors are going to be fiduciaries. These commission-only advisors don't have to be fiduciaries. These fee-based advisors are sometimes fiduciaries, sometimes they're not. And these performance-based advisors are generally going to be fiduciaries. You as somebody who is trusting somebody else with their money, want a fiduciary as your financial advisor, because if they're going to be managing your money, if they're going to be working to grow your money, you want them to have a legal obligation to work with your best interests in mind. Now, that doesn't always mean they're always going to follow the law, but you at least want that protection. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.